Hello, my name is Kathy Witcher, and I'm the Executive Director of the Urban Development Institute Capital Region. And one of UDI's foundational pillars is education, where we like to provide our members with the information and tools that they need to navigate through our industry. The Capital Region is very fortunate to have partnered with Mark Holland, who helped us create our real estate development management program. And it's a 9-month certificate program that is recognized by UDI Capital Region and by Royal Roads University. Our program, we feel, addresses an educational gap that we recognized that needed filling for our industry. And to give us more information, I would like to take this opportunity to introduce Mark Holland. Mark is the president of Holland Planning Innovations, and he is also an adjunct professor at the Vancouver Island University, where he is passing on his great wealth of knowledge to our future planners. So, hello, Mark.
Kathy, it's a pleasure. So I'm going to, thank you, Kathy, this is really great. I'm going to give you a quick overview of the real estate development management process. And then I'm going to just give you an overview of our course certificate program at the end of this, so you can see how each of the courses all fits into this larger picture. The purpose of this presentation and our larger certificate program essentially is to provide an introductory level of information for development managers. Now, it's useful for anybody who works in the development industry, but we're really focusing on that introduction of the large scope of issues and challenges and problems and areas of knowledge that a real estate development manager needs to acquire in order to be effective at doing this. Interestingly, there are very few places in North America you can study this. Most everyone in the industry that manages development really learned on the job. And this creates quite a challenge for companies when they're trying to find folks who have a basic understanding of development management to be able to take on how complex these projects are. Obviously, as with everything in life, if you really want to build advanced skills, you need to do it. And all of us who've been in the industry for a long time have a very interesting toolbox of skills and experiences, most of them related to the projects that we've worked on, and every project is different. So being a real estate development manager is sort of like playing the neophyte. You come to each project completely new. You bring the experience you've had in the past, but you start asking a whole lot of questions. And that should become evident here. When you take the certificate course, we bring in experts from each of the specific areas, because one of the things a real estate development manager does is to coordinate a lot of experts in all of these specific areas in order to achieve the desired goal, in order to integrate all of these different perspectives and inform difficult and challenging decisions that have to be made. So let's get started. I'm going to give you my perspective on this. Everybody who looks at this organizes things slightly differently, but this is how I understand from my years of experience or decades of experience how this whole industry works. Essentially, it's a very, very multifaceted business, this question of what is real estate development. However, there's one core aspect to it. It's essentially to change the value of land and buildings, resources, to create more value. So what we would call maybe a highest and best use, or a higher and better use. Now, there are numerous steps, which I'll talk through in just a moment. There are many areas of expertise required and a cast of thousands of different stakeholders who will be involved at any given moment. So let's start with the basic question of who is a developer? Well, when we ask that question, a picture obviously comes to our mind of what we think a real estate developer looks like. They might have a tool belt on and worn out steel-toed boots, if that's from one angle that you've looked at. On the other angle, they might be in a $5,000 to $10,000 suit, driving a Rolls Royce, and being seen to be, cutting the ribbon and toasting the opening of some new multi-million-dollar hotel. In reality, it's a real mess of everything in between. Let me just give you a few points of the kinds of folks that we see, or the kinds of roles that we see very frequently in our industry. Because real estate is about real estate, and by that I mean land, we often have, there's a large group in our industry which we affectionately call dirt guys. And essentially what they do is pull together deals around land. They may or may not increase the value of the land through going through approvals, OCP amendments, subdivisions, rezonings, et cetera. And then they may sell that land. We have a subset of all of these different areas, which we affectionately call deal makers. And these are just basically folks who see a deal, buy a piece of land, maybe they're just going to flip it, maybe they put a few pieces of land together, maybe they buy something, do a minor change to it and get it back out there. You make a lot of money doing this, but you really have to know what you're doing, because you have to be able to see where something is undervalued and know that you can add value to it fairly quickly. One area that we're more commonly assumed maybe to be connected with in terms of who a developer is are builders. Now, interestingly, builders are only a small part and often not even necessarily considered to be part of the real estate development industry from many perspectives. Some people actually start with a piece of land. They do changes and rezonings and site plans. They get everything approved. They then get the buildings all designed and approved. They build the buildings and sell them. This is what we would call a full service developer. Now, there's surprisingly fewer full service developers than you might think. The nature of the amount of money, the amount of expertise, and the amount of time required often results in people becoming experts in or getting very comfortable in small pieces of the larger process, and they play a critical role in that larger process, but they may not actually see a project all the way through to construction. There's also a stream of developers who are just businesses, and they essentially buy land and rezone it and develop it for their own facilities. We find a few of these. We find these in more rural areas much more commonly than in the bigger urban areas. And then there's this explosion of, obviously on TV and obviously in reality, particularly in larger urban areas related to maybe heritage or just generally, the renovation experts, where they'll buy a piece of land. They may or may not rezone it. Sometimes it does take a rezoning and a lot of approvals in order to change the use, and then they essentially reconstruct an existing building and site. They may or may not add anything more to it. In fact, they may take some things away and bring that back out to market. And then there's any number of permutations of all of these. Bottom line is, you need a piece of land to be a developer, and therefore anybody. The real question, as you'll see as we move through the next few minutes, is are you actually a really good developer, and can you make this work? So we have individuals and companies that do this, and we have generalists and specialists in the field that do this as well. Now, I want to leave you now with the most important piece of this presentation and the most important tool you could take away from all of the work that we do in this course, and that is the Real Estate Development Manager's Matrix. This looks at two axes, and this is the first one, and this is the structure of today's presentation, which is basically the large stages that we go through when we start envisioning doing a development. We may not even have a piece of land, we just have an idea, or maybe we have a client, all the way through to post-construction. At each stage, interestingly, you're going to be doing pieces of work from every other stage and a whole lot of other streams of activity. So on the other axis, we talk about team management, the whole community and political relations. There's a lot of technical studies that come in at every stage. Land management, if you own a piece of land, you're responsible for that piece of land, and all the way through all these different components. You're just doing different aspects of that stream of work at each stage as you move forward. And in different stages, one or two of them may become the dominant focus for your activity. So here's a quick overview of what that looks like. So from our early concept, which I'll start talking about in a moment, all the way through refining that concept, getting the financing in place, getting the design done, getting it approved, all the way through construction, you will be looking at each of these different sorts of streams. So this becomes essentially your mental roadmap in a project as a development manager to keep in mind what the large steps are that we'll be working through. If you're not actually a developer yourself, but you work in the development industry, maybe in, let's say you're an engineer or an architect or someone who plays a key role, but only in one piece, this matrix can help give you a sense of what your client is going through and where you fit into this very large chessboard of what is on their desk every day of the week. So where to start? So let's start with the first couple of steps that we're going to get into here. They go together. So I'm going to talk about them separately, but they actually go together at the same time. Stage one is your initial concept. And this is essentially where we look, we have an idea, we may have a client, we may have a market, we know there's a market need, and we're pretty sure we know what we're going to do. This is particularly true of developers who do a lot of the same thing. They may be fantastic at single family dwellings, or they may be really good at commercial strip centers. The second stage is you need a piece of land. Obviously, the land determines an enormous amount of what you can do, starting just with how big it is, and what the unique aspects are going to be in that unique location. But they're sort of two separate pieces of work, but they're done together in reality. So let's just take a look at this first piece. So really what you're going to do in the big overview is you're going to do a quick look at pretty much every other step you're going to have to think about and do for the rest of the entire development process. You just do it at a first cut in these stages. So you're going to take a look at your concept and get a preliminary idea. You're going to find a piece of land or establish the criteria for a piece of land. You're then going to look at how would we develop this? How would we phase this? How would we pay for this? How challenging would be the planning and the approvals? What ones likely would be needed for any given piece of land we might be looking at? What's our market? How much can they afford to pay? What's our competition? How would we position ourselves in that market? And then when it gets down to, if we're successful all the way through that and we get into construction, what are we facing at for construction? Some projects, beautiful pieces of land, and then when you actually figure out how you're going to construct the water reservoir required to supply the water, you realize you're going to have to helicopter in concrete to the top of a mountain for a reservoir. Okay, well, that's going to be expensive. So we look at constructability at the very, very beginning at a preliminary level to say, are there any really big issues we should think about? And interestingly, at this stage, we walk away from a lot of pieces of land all the time because we do a quick run through this back of the envelope, if you will, and go, that's too risky, that's deadly, that'll never work. And alternatively, if we decide to proceed with them, this initial kind of scoping really sets the path for the entire rest of the project. So let's look at these in a little more detail. So when we're first trying to figure out what we want to build, we need to think up this concept, and it'll have many different aspects to it, the different land uses, parking realities, open space, environment, many other components to it. Some of the questions we ask ourselves early on is, if we have multiple projects in our company, what's the purpose of this project? At one end of the continuum, this is keep the lights on, as in we're going to build this, it's small, we're going to get in, we're going to get out, and that'll keep the light, that'll pay for salaries, coming up in a few years. At the other end, and I've worked with quite a number of people at this end of the continuum over my career, very wealthy developers or other business people who bought a large piece of land and really want to leave a powerful legacy of something really quite excellent and unique. So these have a completely different rationale behind them. They all still have to make financial sense and work, but it's a completely different story. What does your company and your team have expertise in? Anytime you go into something new, you take on a lot more risk. What do you think the market is probably going to want? How big could we make this work? Not just overall, but certainly phase by phase. And what's our competition going to be in these kinds of areas? We usually start with a generic set of concepts when we're doing this work. So in a residential one, obviously, the most obvious one is, builders or developers that put out a lot of single family homes. In the US, particularly, we see huge amounts of money and developers doing this, investing in and making money doing this kind of form. As we get to more urban ones, obviously, these projects become bigger, more expensive, and more complex. For other core land uses, commercial, retail, industrial, we'll see things like small street retail, or maybe more common kind of a strip retail center. Malls, we don't build too many of them, but they're still around and they're being renovated and extended, more likely today into lifestyle centers, which are sort of an indoor-outdoor experience. Business office parks, industrial, and some combination of all of these in interesting mixed-use projects. At this stage, as I've mentioned a few times here, what's fundamental is that the product that we're creating is something that the market will buy, that they need, and that they can afford to pay for given the costs of the land and construction that we're looking at. So we start with some basic market explorations, figure out what they want, what they can pay, and how much competition that we're going to have in this market doing, and what do we need to do to be a little different, to be a little better, to be a little more desirable. We'll very frequently hire an architect or a land planner to do a quick yield study. This is what we call a site plan that is very, very preliminary, but it is informed by a pretty good level of excellence and experience in the designer as to probably where accesses would be. We look at underground or surface parking modules. We look at the basic layout modules of buildings that are high efficiency for those buildings. Where probably public open space, we'll do some preliminary studies potentially on environmentally sensitive areas, any number of other things that may come into this, to kind of do a quick, essentially Lego block layout of what might go where and how much might we get. We then take a look at that and at the numbers that come from the yield study, and we convert them over into financial numbers. So we figure out how many units we would be able to sell or lease, or how many square feet, and what would probably be the price ranges we would get from that. We then work back with summary typical costs for soft costs like consultants and all the municipal fees and things like that, the hard costs for the land, marketing, financing, everything that we'd go through. And we have to insert a minimum, typically 15% profit into a project like this in order for the banks to look at it seriously and be willing to finance the project. If we have not purchased a piece of land at this point, then what we've done here at this stage is we've figured out how much we can afford to pay for the land. So there's a couple of different numbers we can solve for in this. We can solve for profit, but often at this stage we're solving for, if I pay more for this piece of land than that number, then these numbers don't work and I'm not going to get financing and this project isn't feasible. We then scope out approvals and timing. How long is this going to take to get approved? Some municipalities, you can get your rezoning approved in 6 months. In other municipalities, it will literally take 6 years. Obviously, if you've bought a piece of land and you're sitting there holding it and paying taxes and interest and everything on it for 6 years, that's a completely different spreadsheet than if you can get in and out in 6 months. So you have to look at this. Who are your friends and supporters? Who are going to be your enemies? You typically have a lot of quiet conversations with maybe city staff or the councilors at this early stage, just to see, like, would this be supportable, et cetera, and how long would this probably take. So we have our concept. We probably have an area we may be interested in, maybe even a few sites in mind. And now we have to get down to the business of selecting the site and securing a piece of land. If we already have a piece of land, then that previous stage would come second, and we would be working out what the optimum concept and yield study would be for that piece of land. But you never know which one you've got to start with. So when we're looking at a piece of land, we have to understand the context, because the context for a piece of land shapes all of its value and all of its potential. So I'll talk a little bit about the different kinds of things that we look at in a moment, but we're going to be trying to select 1, 2, and ultimately your final site, and then to negotiate a realistic deal on that site to make it work. Now, finding land today is a very difficult situation in most municipalities that are developing or in demand in any way. Planners have constrained a lot of edge land around cities in an attempt to become more sustainable and have less commuting and less sprawl. And that means we're frequently working and really having to work hard to find pieces of land. So we'll work with real estate brokers. We'll do our own research. We'll talk to a lot of people, get word of mouth. We often buy and sell land to each other, depending on what our portfolio of projects is doing and how we're feeling about different market and different neighboring communities. So the first thing that we have to do before we buy a piece of land, because every piece of land has so many different facets we have to consider, is due diligence. So these are the 4 things we typically look at when we're first looking to buy a piece of land. I'll start with the bottom right here, the physical context. I mean, we need to just basically straight look at the site. How steep is it? What is its topography? What are the soils? Is there possibly contamination, or might we run into some problems there? And once we start digging, are we running into solid rock, or are we in a swamp? Are there any ecologically sensitive areas here, especially things like creeks that set 15 to 30 meter setbacks of what we can do around them? Looking around the larger area, are we looking at noise from highways or industrial or other activity around? What are the lighting situation at night? Is there any other odors? And anything else that seems to make sense from a physical context point of view. We then look at the services. So water, sanitary, you can't build unless you have a viable water and sanitary supply. And depending on where you're at, you may have some very interesting challenges with flooding or a lot of water, stormwater, especially as climate change increases these events. How close are our power, utility, gas, any of the other kind of utilities we would need, and then more community amenities such as schools, services, shopping, et cetera. The regulatory context then becomes a critical issue as well, because it may determine how much value you can add through going through a planning and approvals process. So we look at all the plans and regulations that apply, and maybe even some senior government initiatives that may have something to say about this. And finally, to determine whether we think that the market is probably going to be there, because this will take us many years to get through a project. We look at growth rates and demographics, economic projections, the reputation, evolution of a neighborhood, how many other people are in the same market space for competition, and many other aspects. And at the end of it, you have to have a very sober conversation with yourself. Do you actually now really want to proceed with this concept on that piece of land? Because this is the final key decision, because once you've purchased the land, you're in. And if you paid too much for the wrong piece of land, your project may essentially be bankrupt before you start. You may just not know that. So this is the most important decision. And in real estate, it takes basically a stomach of steel to move into these areas, because you know the least amount about your project when you make the most important decision. Now we need to secure the land. Now up front, we might immediately think that, okay, I'm just going to put in a bid and we're going to come to a negotiation. I'm going to sign, transfer the money, and now I own it. In reality, from development, given how complex it is and how much money it takes, we often want to look at other, well, specifically options. We often really prefer to see if we can purchase a piece of land with the actual the vendor comes in with us as a partner in a joint venture, or maybe they become the mortgage holder for the land and the vendor take back mortgage. Often we're finding that we're working with, say, families that have inherited land or other issues that have tax implications or business transition implications. And there's a whole lot of different clauses we have to negotiate experience in our industry. So at the end of phase one, under understanding of our market and competition, our pricing, we have a basic financial model for the project. We understand what our next steps are, and we've got a good piece of land secured. And now we move into the subsequent stages, and what we do is essentially go back and revisit everything that we've just done in more detail with a lot more certainty. So our next stage then is to figure out exactly in more detail how we would do this development. And there's two factors to that. The first one is the actual structural project management functionality of the development strategy. How are we actually going to do this? And the second one is, how are we going to pay for it? So in a development strategy, we go back to revisit our market and positioning. We look at all the problems we identified in our due diligence and figure out, okay, exactly how are we going to do this? We'll get a bunch of studies done on the site, engineers, environmental studies, other studies that are done, archaeology, et cetera, and figure out exactly how we're going to deal with this. We're then going to look at this, and we're probably going to be breaking it up. I'll talk about phasing a few times in the next few minutes, but this is one of the key areas where we think about phasing and what partners might we want, what tenants do we need to recruit, how are we going to do this, what is the political timing, are there elections coming up, when are we going to want to be in the process for approvals, and who exactly do we want on our team, who knows the area, who's got the right architectural experience to do these kinds of buildings. Who do we want, working with our team out there in the political war of community relations and working with the politicians, et cetera. And then we're going to figure out how to pay for it. It's an interesting thing that, a lot of people can make a lot of money in real estate because there's just a lot of money at stake in it. However, in order to do a project, most banks require about 1/3 of the money to be somebody's savings, yours, your friends, your family, the friends of your family, your friends' families, and anybody else who comes in. And brokers will go out and find other folks who are willing to come in as equity partners. So one of the things we often forget when we think of a wealthy developer is there's a very good probability that developer was wealthy before they got into development because it takes so much money. For instance, a typical 25-story tower is probably today in 2022 about a $100 million project. So you're going to borrow $70 million, but you're going to need $30 million in someone's savings to get into that, willing to risk $30 million worth of their savings on this project. So typically, there's a lot of personal money at stake, and the banks typically require most anyone with decision-making power to put up pretty much all of their own personal assets as collateral, even though they may be small in comparison to what you're borrowing. They want you seriously motivated to make this work. So whose money are you going to use? You're going to borrow some, you're going to bring in some of your own savings and other people's, and then you're going to have to structure that financing strategy so that the people who give you their money to use for a few years get well paid for that, taking that risk with you. And then you have to go and secure this money. So we'll often work with investment recruiters or brokers, et cetera, to pull this money together and be pretty confident that we're going to have enough money to make this thing go. So at the end of this stage 3, we have our land, we have a basic concept, and we have a strategy for how we're both going to do it and pay for it. Now we get into the much more detailed work of completing and getting ready for the approvals process, which means we have to do a lot of logical thinking, and we have to think about where's the magic, what's going to make this project really stand out and be extra desirable. So we'll do additional market research and competitive analysis. We'll do looking at sort of essentially the phasing. We'll look at expectations, we'll look at all the detailed engineering design, and we'll start introducing ourselves and starting building the partnerships and the deals that we know that we're going to need to make. And we start in on the community relations and politics of taking our project forward. Now, there's an interesting process here of phasing. Now, I mentioned I would talk about this because it's so key. Now, if you're doing a small site with one building, you're not really thinking about phasing very much. But if you're doing a larger site, and often our projects, particularly in the edges of cities or in anything that's a big project, you're going to have multiple phases. One of the fundamental things that takes down a lot of projects is that they can't figure out how to sell enough product first in the process in order to pay for all the first level of roads, pipes, pumps, wires, and servicing, et cetera, that they need to sell in order to get the revenue in a short period of time that they're going to need to pay back all of the costs for all of those infrastructure. So this is one of the reasons why a lot of big projects fail early on, is that people miscalculate the absorption rate. By that I mean how many people, how big is the market, how many people will buy your product at that market in that short period of time you need in phase one. And if phase one doesn't work, you don't have a viable project. So even if the financials and the overall plan looks awesome, if you don't have phase one, it's not going to work. So this becomes one of our first and foremost agendas that we look at. So the refinement stage, we end up with a refined concept that attracts the buyer's intents in a competitive market. Now, I've talked about the financing strategy. Now we have to actually go get the money. And so, as I mentioned, there's two types. There's equity, which is essentially your own money or other people's savings that go in. Now, this is high risk and they need to be rewarded for that. It's patient money. It's the first money that comes in and the last money out. Banks will only lend you maybe up to 50% of the money to buy the land. And they'll lend you more and more, maybe even up to 100% for construction if you're an experienced firm. But they don't like that long-term in. They want to be in and out in 12 to 18 months. So you have to have folks' savings, your colleagues and your partners, your friends and your family. That money could be in there for years before it gets out. Debt, on the other hand, is low risk and low reward. They are not interested in the profits you're making so long as there are enough profits there in the plan. They just rent you the money. So as long as you make your monthly payment of interest on them, they're fine with that. So they're the last in money and they're the first out. You pay them off before there's any profits to distribute to your team. So we see a typical kind of sequence of, we're constantly working on financing on a project from the beginning to the end. We start with early equity. More people often come in with equity a little later on, but they are taking less risk, so they get less of the returns. We'll typically have a primary debt lender that we'll be working with, and they may help us buy the land, they may help us service the land. There's lots of different terms and interest rates at each stage, and they each have a portfolio of how much money they want to lend to each stage, and hopefully they'll work with you all the way through. But sometimes you need a secondary lender to come in, more risk for them. So they'll charge you higher interest rates as you get through secondary and tertiary debt. The project often will take many years, and these financing stages sometimes don't quite perfectly overlap. So we have another form of financing called mezzanine debt, which will basically offer you a loan at very high interest rates for a week, 2 weeks, a few months, as you move between these larger lending agreements, because it can take a while to negotiate. And finally, once your whole project is done, whether you're just selling lots that are all serviced now or actually a completed building, we go back for what we call takeout financing, or for most of us, your mortgage. So this is a much lower interest rate. It probably has, rather than a 12 or 18-month cycle on it, it's got a 25-year amortization on it. And that allows you to stabilize your debt, pay all the debt off that you've had on the project to date, and move forward on a much better financial basis. So where do you get the money? Friends, family, friends of friends. There's a whole industry of investment brokers. There's a lot of money available for real estate development, especially in a good market. And so investment brokers represent a lot of different folks who would like to put money into it, including mortgage investment corporations and others. We talk with the banks directly, and there's other institutional lenders, pension funds, mix and other things, other groups that we can talk to. So the outcome from this stage, and this stage is ongoing all the way through step by step in the project, is the money. It's the fuel in the tank that allows you to move forward. Except now, once you start borrowing, the clock starts ticking, because you need to move very fast on this, because you're now paying money every single day, and you're going to be owing more and more as the days go by. And this is where things start to get interesting. To date on your project, it's all been quiet. You've been working at your desk, you've been working with your colleagues, you've been knocking on doors and having quiet conversations and signing deals and doing all these things. And now it's about to become very public and potentially very messy. So there's a whole lot of approvals that we typically need today in land. It's very rare that you can find a piece of land that already has all the zoning and official community plan designations that you need and is all subdivided the way you want it, almost never. So you have to go through one to actually maybe a long list of approvals that can take, like I mentioned, 1 to many years. We often have to change the official community plan designation for an area slightly. We very frequently have to rezone it from the zoning that may have been on the land for 50 years, and now we need to change it. We often have to break up a parcel into different pieces or move property lines around, so that's a subdivision process. Most parcels in any urban area will require a development permit, which essentially is a conceptual design, fairly detailed, but not constructible yet. To go through all of the different kind of how it's going to look and how it's going to address environmental issues, et cetera. So we need to get a permit for that. Then we do the final construction design of the building, and we get a building permit to be given granted permission to actually build the building and ensure it will meet all the codes. And once it's all built, then we still can't occupy it until the municipality or the local government has given us an occupancy permit. Lots of risks, lots of delays, lots of technical and political realities here. The technical aspects involve working with local government, understanding their policies and regulations, understanding all their plans, looking at all the legal encumbrances that may be on that land. There's a whole series of other governments and government agencies that are referred, that our application will be sent to them, and they have a right to comment on it or seriously intervene. Ultimately, access and servicing are critical, and we have to go through a whole series of engineering, public works organizations, ministries of transportation and infrastructure, and many others that may have comments or issues that affect your piece of land. And then there's the political process. So can you actually get this approved? Are you staying close to the existing policies, or is this a radical change? And can you get support for that? What do the local politicians want? That is your fundamental question, because if that 7 to 9 people who sit on that council don't agree, if you can't get a majority vote, you've wasted pretty much all the money you spent, may well be wasted. You're gonna have to go back to the drawing board and find something they will approve. They're always influenced seriously by influential citizens and groups, and you're gonna need some supporters in order to make this work. So the approvals process that we typically go through involve putting together your team of experts, including a planning and community relations team, pulling together engagement strategies. You're out there with websites, meetings, social media, open houses, spending a lot of time talking with councillors, responding to opposition and building support. And then at the same time, you're working through all the technical issues with staff in City Hall. So you're meeting with them regularly, you're spending a lot of time, often even before you put in an application, trying to make sure that you're pointed at the right target. Working with them on trying to understand their policies and regulations and shaping this project, and coming forward with strong rationale and public benefits that you're going to bring to the community in order to essentially persuade people to support you. When you finally get to council, when staff agree to get to council, you will have been hopefully meeting with some of these councillors and the mayor periodically as you move forward, but you come back to council typically for the approvals process several times, usually a first time, for them to they can choose to stop your project at any time, but here's what we're trying to do. And if they don't want to stop it at that point, then they'll probably send it to a large public hearing, and you set up to essentially have everybody who supports or opposes it, if they want to come and speak to council about this. And you need to have answers for all their concerns and all their questions and be able to give very good presentations, and then hopefully they'll approve it. And you go through your final steps of the legalities and the covenants and things in order to get it approved. So hopefully at the end of this stage, you've got the approvals, the permission granted in order to go proceed now to build what you had envisioned that you were going to build all those potentially years ago when you secured the land and got the concept together that we just talked about. Now, to this point, if you think about it, there hasn't been a penny that has come back into your bank account for all the money that's gone out. And so this is where it gets very, very serious in getting some marketing and sales program underway. Now, we'll be thinking about this from the very beginning, because we're going to need to brand our project in terms of making it desirable and competitive. and we will have been tweaking it all the way along to keep current with the market. But this could be 5-6 years after you got started. So the market, the economics, the interest rates will have all changed. So you're always having to adapt in your marketing and sales plan. So you're going to be focusing on specific target markets. You're going to put together a marketing strategy, and you're going to move this out. Now, we're allowed to do pre-sales once we reach certain levels of approvals. Based on essentially the Real Estate Development Marketing Act here in British Columbia, and something similar probably in many other jurisdictions. So it requires a disclosure statement that outlines all of the details of the project and projections on timelines, etc. During the time leading up to pre-sales, you will have been taking registrations of people who are interested, and then you contact them all and try and get them all to see if they weren't prepared to buy something. So our marketing strategies really focus on 5 things. What is the product we're bringing forward? What is its price? How are we going to promote this to our key target markets? Where are we going to interact with them online and physically? Is it a discovery center or otherwise? And what is our presentation experience? Like what is their experience as a customer when they interact with us at every stage? So we'll end up starting with marketing, which is different than sales. We'll get a marketing plan together that does the plan for all of these. It lays it all out, sets budgets, sets phasings, got everybody together, and has got the team organized to do this. And then we'll implement that. And as we move towards sales, it's a different team that often come in to help us with sales unless you have it all in-house. So you'll need to get all of your legal work in place in order to check all the boxes to stay on the right side of the law as you bring this forward. Lots of people will have been interested in your project if you've done your marketing right, and now you have to convert them into real sales. So we may or may not build a discovery center. We'll certainly have websites and a social media program. We'll often hire there's groups of people who move from project to project as sales managers and salespeople. We may be working with realtors in an area. And as we work our way through this, we manage sort of what is available at any given point, what its price is, and what the customer experience is. And at the end of this process, hopefully, we've got a great project, very well branded out there, and ideally, it's all sold. Now, if it's pre-sales, you still can't use their money unless you buy deposit insurance, which guarantees that if something goes wrong on the project, the folks who put down their pre-sales price and bought one of those projects before it was built, bought one of your units before it was built, will get their money back. But essentially at this stage, this is the first time after many years, potentially, that any money has come through the door. So you can see why it costs so much money to build things today. Now, heading into our final couple of stages here, construction actually can take a good deal of the time, depending on what the project is, or it may actually be a relatively small stage if we've had a long, complicated approvals process. We have our final approvals to secure just before construction, mainly heading to building permits. We create tender documents that we put out to contractors to build it if you don't have your own internal contracting and development company or building company within your development company. We select contractors. If we're our general contractor, then we'll be selecting all the subcontractors like drywall and plumbers and framers, et cetera. Or if we've hired a general contractor, they'll do that for us. And if you are, in fact, not a builder, then you may actually sell this site to a builder. And the builder at this point, this would make you essentially one of the dirt guys, where you essentially spent years working to get a piece of dirt ready to sell to a builder. And the builder who doesn't want to go through all the pain and damage and risk that you've gone through, they just want to buy a piece of land they can build because they make their living as a builder. So then they may buy it and take it over as a builder. The construction process has some liaison with the original developer if you have a general contractor in there. So you'll be supervising and interacting and be largely in between the contractor and the developer with the staged releases of financing step by step according to the contract documents and the financing agreements. So we first put in all the services and the roads on a site if they aren't already there. This may require bonding and have a lot of time involved in this. And then once they're in and we've got all the parcels approved by a land titles office, then we can begin to go vertical and start to build the buildings. Lots of issues in contract management for construction. It's very legal, lots of hands-on interaction, often change orders because you just can't foresee everything that happens. And you're dealing with a lot of really detailed trades on site, architects, engineers, all the plumbers, many different contractors. So at the end of this process, ideally, your servicing is completed, your lots are sold for sale, hopefully your buildings or for sale, your buildings hopefully will have been completed or be clearly for sale and leased, and you have your project. Now, once you're mostly all sold out, then you double down on all your marketing and sales, because if you remember the number that I mentioned at the beginning of how much profits in a project, it's probably not more than 15%. You might get lucky, but most of the time, cost overruns have taken your original 15% profit margin and winched it down a lot lower. So you can imagine that if we had a 10-unit townhouse project and we had a tiny bit that went over budget, we may have a 10% profit margin at the end. That means 100% of the profit in your project is all tied up in that last unit. So you've sold 9 out of the 10 units in a 10-unit townhouse project. You still haven't made any money. All of it's in that last unit. So we have to really do the final push on those final units, because interestingly, they're obviously the least desirable. That's why they're at the very end. We've got to get those all tied up and done and out the way. So folks need to move in. There's deficiency lists that we have to fix of things that contractors missed. The early commercial units, the coffee shop and the pub and the grocery store and all of those that we promised our customers, they all need to be in there and operational and successful. And then after all of this work, if we don't have our final customers happy, then they start dissing us on public media. And after you've spent 10 years of your life pulling something out, you end up with a bad reputation, which obviously is not the desired outcome. So we really bend over backwards in the end to make sure that our customers are happy and we're responsive. Even if they're being unreasonable, we do need to have a good reputation out there, because that's going to affect whether people want to invest with us in our next project or buy our next projects. We also have a lot of commitments, such as our phase development agreements that we've made to the city as we go along, and we have to make sure that all of those are being met. So I'll conclude here on the overview with just a few observations. Obviously, it takes a lot of time, it takes a lot of money, it's very complex, and it's a very risky process. And there's a lot of money and expertise. And the development manager basically orchestrates and manages this whole process. They aren't the specific detailed experts, but they need to know enough about all those stages to manage this three-ring circus. Of interest, every building that we live, work, learn, or play in all went through this process. So it's quite remarkable how much work and how much complexity it takes to build the cities in which we live. Now, our UDI certificate, to step back and talk about that, goes into detail in every step of this process to give you a much more detailed understanding of what it's like to have to, what happens at each of these stages and what it's like to learn it. So our development certificate course starts with an understanding of the financial models. We spend an entire month on the pro formas of basic condo projects and rental projects, so you understand the money, because every decision you make from there on has to constantly be, you're standing in your pro forma as you make these decisions, and it's affecting all the numbers on the spreadsheet. And if that spreadsheet doesn't look good, it's not a good investment for you, and you will probably not get a bank to lend you the money to do it. So this is the number one most important keystone in the arch of this development process. We then spend a month talking about the whole process of finding and securing land. And the second one then on developing concepts. Again, these were those first two processes that go together. Again, we can't move forward without financing, as I mentioned. So we spend a whole month talking about how to get equity, how to organize it, what kind of deals are related, and debt, all the packages you have to put together to get money out of banks and out of good equity partners. At every step in here, you're doing legal deals. You've got contracts with everybody, and if things go sideways, you're having to try and not end up in lawsuits, because they're very expensive and time consuming. So we do an entire month on all the different components of law and contracts and the legislation that covers this. We then spend a month going through all of the different kinds of approvals you may need to understand, working with a director of planning and experienced people who are experienced in lots of these different approvals, looking at the kinds of applications and the processes and all the studies you need and strategies for how to be successful. Those studies cover a very wide range of different topics and expertise. So we spend another month talking with the experts, landscape architects, engineers, environmental specialists, archaeologists, geotechnical experts, et cetera, to understand exactly what kind of studies they have to do, what legislation governs those, and how best to manage those. And because it's so critical to a project, we also spend an entire month on politics and community relations with some of BC's leading strategists in this area. And we finally close the 9 courses of this certificate with primarily a focus on marketing, sales, and leasing, and how to run those projects. And then we walk up to have a great introduction to all of the construction management training that we have partnered with the Construction Association to introduce our students and folks here if they really want to know more about that. It's an entire industry unto itself with a great education program. So if each of these courses are available individually, they're also, you can, if you get them all, if you do them all, and there's small assignments with them, then you can receive your certificate for having done those projects. So if any of these, if this interests you, I encourage you to reach out to the Urban Development Institute here in the Capital Region, and you can talk with us about your interest in this. And we very much look forward to seeing you in one of our classes or engaging you in some of our upcoming events. Thank you.
Thank you so much, Mark. That was an amazing overview. You've put a ton of work into developing this program. And with Mark's outline and the host of industry leaders that we have that present, we feel that this is of great value to anybody who is either working in the industry or who wants to work in the industry to take this course. So like Mark said, if you want some more information, please, you can go to our website, which is udicapitalregion.ca, or you can email Mark. His email's on the screen here, or you can email UDI directly at udivictoria@udi.org. So thank you all.